Alright, so like there's this huge argument between, you know, memory demand, like from NAND, DRAM, HBM3, HBM4, just high bandwidth memory in general. They're gonna up it to HBM5 eventually and 6 probably. You know, they keep doing that, right? Because they'll inch it a little bit better and a little bit better each time. So I want to get into this because there's an argument that, you know, memory is a commodity, which in most cases, yes, it's a commodity. Does it change from a commodity to something else? No, probably not. It's still going to be a commodity, but it doesn't matter because the demand's going to be insane. You know, well, what if they catch up to demand with supply that can, you know, companies like Micron and SK Hynix demand such high margins or demand such high prices where they get those huge margins, the margins will all flip. I'm here to tell you, if you see the requirement for data centers, like with CPUs, DPUs, GPUs, and TPUs, and amongst the other configurations they're going to come up with, right? I haven't looked into quantum, but if there's a lot of research and effort and work and spend going into quantum computing, right? Which there is, then is there going to be an insane demand for memory through quantum computing? I don't know yet, but maybe I'll look it up, right? But what I'm getting at here is, with the current demand of just training models and some level of inference, you know, we're not even maxed out inference, and who knows, it might be many years before we even see a cap on the amount of inference, you know, that is being used. And inference for these models requires more memory than training these models. Okay, now let's move on to the next step. Autonomous vehicles, which you got Tesla working on them, Amazon, NVIDIA, Google. All these OEMs are going to want it because they can upcharge and safety features and this and that. You know, they can argue that we have, you know, the safest vehicles. You know what I'm saying? So when you think about it like that, you have to understand that, you know, there's a big possibility that when we go into the age of autonomous vehicles, memory is going to be even more high demand. There's going to be more stuff on memory, right? But then let's move into robotics. So as autonomous cars uses more than the models and software, robotics is going to use more than autonomous vehicles. And then we got to think not just like robotics in general, like humanoid robots are probably going to require the most memory. But you know, there's a company called Symbotic that does warehouse automation. Those Symbots, brake packs, and all the other, you know, things they're working on to innovate as a company and make more money as a company. And why wouldn't all these companies, these large companies, try to automate warehouses to push out employees who are less efficient and implement Symbots, right? So, like, you have to think about that, you know, particular situation, you know. Then add on all these warehouses. And if you look at Walmart's like the biggest adopter of Symbotic, they're a big investor. And if you ain't noticed, Walmart's margins are going up. Why? Because these Symbots can pick cases faster, more accurate, and even better than that, they don't stop. And even better than that, they can load these pallets that they're building in the order that you would unload them in the aisle at the store. So, and they load the pallets tighter and better than humans in most cases. So they're faster, more accurate, and efficient. All those in all the warehouses across, the United States, the world, are eventually going to start adopting these, well, I wouldn't say all of them, but a lot of them, right? Most of them. All the big ones, anyways, who can afford to build these SIP-bot, facilities. So we'll go on to that. With drones, every electronic, and we're moving more and more and more towards an electronic, robotic, software, technological society as a whole, as a world, as the Earth, as every country moves forward over the course of time. The requirements, especially with autonomous driving, which we're going to have eventually, you can't put a date on when there's going to be extreme mass adoption. It's solved for the most part. It's way safer than a human driver. They still have troubles with that. You can't put a date on that, but they're not going to stop progression from happening, and we're not going to stop these companies. These companies aren't going to stop spending to make more money if they think that there's more money. That's just how it is. And all this requires is a ton of freaking memory. I don't know if you're looking at Micron's earnings recently or what they're talking about or saying, but if they're really going to have somewhere around 50 to 60% net margins, they got 57% net margins, 57 and change this past quarter. If you're not going to realize that if they guide it up to 33 billion, right? We know they're gonna fucking kill that and bust out like a 35, 36, 37 billion dollar quarter at north of 50% net margins, because you have to think about it from this perspective. Look at all the software companies' margins. They're getting better and better, most of them anyways, like Apple. We're 60%, 3 quarters now, or something like that. Definitely over 50% the last 3 quarters for sure, right? And when you work that out, you're like, these companies aren't going to stop spending on AI because it increases their margins. Better margins, better profitability, better share prices, more money for the shareholders, and most of these companies' biggest shareholders are the CEOs, CFOs, the executive suite, the people who build the software, and work in the companies all own shares. And I don't know if that makes any sense to you, but it makes a lot of sense to me that these people, they're going to go after what's increasing margins, because it will increase share price over time as earnings per share goes up. So when you start to understand that, like, the spend on AI across the board is going to continue to increase, and it might not, just to have AI spend increase doesn't mean Amazon, Meta, or Microsoft have to continue to increase their capex. That just means the smaller companies and the companies around are going to continue to do that too. So it's like a bottom-up effect, because all the big 3 cloud providers and Oracle, not really a cloud provider, but more like a backbone to the cloud. They're going to get a surging demand as productivity and margins increase in their own business. It pushes revenues and growth. Because you have to think about App Lovin. The reason why App Lovin is growing so much is because they're continuing to scale a lot of smaller businesses, and so those companies will pour into App Lovin, because through App Lovin they're increasing their bottom line, their top line, and growing as companies. And so that spend will funnel into App Lovin, and App Lovin, because of their Axon model and their increased margins and revenue growth, and net income is exploding, are going to funnel money through from their customers to the cloud providers, because their Axon model is requiring that out there for you guys to like truly conceptualize that Micron's trading at a 4.4 P right now. And this company is probably over the next 2 years going to produce $200 million net at a 4. Like conceptualize that. This company's going to probably produce $2 billion net, or not 2 billion, but 200 million net. 200 billion net. Let me say that one more time. This company's going to produce 200 billion net, and they're trading at a little bit more than a $400 billion market cap. Commodity or not, that's ridiculous. You're basically saying that the company isn't worth jack at that point. That would be, and they're probably going to do more than 200 billion net. If they could increase production of memory, which I believe they're going to, as per what the CEO said on the last earnings call about increasing production, you're probably going to see $200 billion net over the next 18 to 24 months out of that company. And if you break that down, it's like a 2-year, 2.4 P. So basically you're saying the company is worth shit right now. It ain't worth nothing. In the forward scheme of things. Watch this company blow up like NVIDIA. Maybe not the market cap. Maybe not the share price. But the earnings. And maybe, just maybe, with the increased earnings per share, the share price will follow. If you follow anything that Peter Lynch says in any of his books, or any things he's talked about, or any things that he's written over his career, companies tend to follow earnings per share with their share price. Well, that's all I got. But I'm just being, forward looking here. If they pull nearly a 60% net margin next quarter, you're looking at a 20 billion net